Up and happy Monday to you guys out there. Welcome back to the channel, and today we're going to be talking about when should I buy the dip? When should I put more money into a stock that has dipped? All right, so what we're going to do is scroll down. This is Cash App Investing. For those of you that are new to my channel, you can invest in the stock market, meaning you can buy, sell stocks, and you can also buy and sell Bitcoin. All right, so let's go down here to some of the stocks that I own currently that I'm trading. Now let's look at Wayfair. All right, okay, so as you can see here, Wayfair is very volatile. It has been volatile here recently, and you can see right now I am down a total of 6 cents. I have $90 invested, which means I am down 0.07%. So this play right now, there is definitely no opportunity right now to buy the dip because it is a very, very minimal, extremely minimal dip. So I would not invest more into this right now. But here are some factors that I look at, and I'm just sharing my journey with you. This is not financial advice. Do your own research before you invest in the markets. All right, so what I do is I come down here and I look at the share price. Right now Wayfair is trading at $55.21, and then if I come back up here, and let me show you this, and I talked about this in a recent video, my average cost right here is $55.28. all right, so, and I've only invested I think once or twice into this play, and so that's my average price on this play. And which, if you look at 55.21, 55.20, so the price of the stock is a little bit lower than what I bought it at. So it's a very slight dip. And if you come up here, let's just say, for instance, let me do this because that may not be the best example, but what I'm going to do is show you when it was trading at $57. Okay, so it was $57.55 back on Thursday. Okay, so, and if you look at it, I'm going to slide the cursor over, and so when it dips about 8%, when it's down here trading at about $52, that's about a roughly an 8%. Actually, down here around 52.79. That's a roughly about an 8 to 9% dip. And that level of dip, that amount of a decrease, is where I would definitely buy the dip by dollar cost averaging. Okay, so what I would do when that takes place on this particular play, what I'll do is, at the very least, I will double the investment amount. So I will throw in another $90 at that point. So we're looking at right now, it's trading at $54, and my cost is $55. So I would probably somewhere around the I would say the $51 mark is where I would dollar cost average on this particular play. Now, one thing you want to keep in mind, you definitely when it comes to dollar cost averaging and buying the dip, if you don't have expendable income or capital, extra money, this is not something you want to do. All right, you only do this if you have money put aside that you are willing to lose to do this, because this is the stock market. You can lose money if you sell at a loss, or if you sell when your stock dips, because you can buy the dip, and I'll just keep it honest with you, you can buy the dip and that stock could continue to dip, and you might buy it again and it could continue to dip. So there's no guarantee that a stock will come back up anytime soon. That's why I am partial, or I prefer swing trading, because I get into a play knowing that, hey, this thing, this thing may last a couple of days. It may work out to where I'm in it a couple of days, and then it may work out to where, you know, I may be in this play for 2 or 3 weeks. So I'm mentally prepared for a play to last 2 or 3 weeks. So that's why I say do not invest with money that you need to pay bills with. I don't care if you need it for this week, next week, or next month. Do not use that money to invest in the stock market. That is the biggest tip I can give you when it comes to buying stocks, day trading, swing trading, or investing. All right. So and the thing is, you know, you don't have to follow my strategy. You can buy the dip in any level, any increment amount, you know, amount of money that you want to spend. That's up to you. But my thing is, the only time I consider buying a dip is when my average price, my average cost is considerably lower than where it was when I bought it. So that's my position. And say if it does not dip and goes back up, then I sell and take my whatever profit I get. I sell it at that point when I'm swing trading. And sometimes that happens the same day that I buy it, and that becomes a day trade, right? So a swing trade can become a day trade very easily. But when I day trade on purpose, with the purpose of day trading, I set my stop loss. So it's not going to become a swing trade if I'm entering a position with the purpose of day trading. I hope that doesn't confuse y'all out there. So because they're two completely different things. But again, a swing trade can inadvertently turn into a day trade, which is not a bad thing, because if that happens, that means I'm immediately in the profit. And so that's my my 2 cents for the day. These are strictly my opinions, and I greatly appreciate you for checking out this channel, and leave me some comments below and tell me, you know, what y'all think about this strategy. And if you have a particular swing trading strategy or day trading strategy or investment strategy, you know, hey, let's talk about it below in the comments. I greatly appreciate y'all, and let's have a fantastic week.